Good evening, welcome to my end of the week recap video here for SPY and trade plan for next week. Try to go over my trades here real quick. First of all, I was holding these 8May2019 puts here over the weekend in at 37. Closed those out here Monday once the gap down at 236 for a very nice trade. Of course, had I held those things came all the way down to 286 and would have been $5 in the money, so missed a little bit there. Anyways, after I closed that out, I was immediately looking for a breakdown and took these 285 puts here at 53. Did not break down, closed me out here at 46. Later in the day, it looked like we had put in a peak here based on this bearish engulfing bar. Took the 8May2019 puts at 141. Stopped me out when it broke above the base at 126. Of course, in hindsight, I could have added again here at the end of the day, but it's not something I was looking at. Tuesday, took this 289 put here for a breakdown at 136. Initial drop took some out at 166, excuse me, and the remaining trailed me out here at 156. Overall, decent little trade there. These did go all the way up to 350 down here. I have some notes just to beat myself up over, remind myself that I am reading price right and just not holding it long enough. But with the choppiness and the sell-off in the market is not as fluid as I thought it would be, so I think we are going to have a significant bounce here. Okay, so Wednesday, chopped myself up right here. This initial pop, I thought this was going to be a blow off, so I took these 286 puts here. I was in just a little bit early, obviously, and once it climbed higher, I immediately reversed. I flipped and I took those off at 12. And I took these 290 daily calls here at 34. Well, that's the definition of being chopped up here. Because I thought this was going to be a break above a range and a move higher, well, I got stuck. So stopped myself out here down below the VWAP at 24. Small little loss there. Thursday, nothing was done. Friday was another day I took too many trades. Opening range, looked like we hit sellers, and I took some 285 puts here at 108. Break above, stopped me out at 96. In hindsight, these little guys went to 250 all the way down here on lows. On the opening range breakdown right here, I took these 283 puts here at 50, and they actually trailed me out here right here at 57. Now, I was watching a 2-minute basis. There was a bear flag. I had my stop really tight, and they just popped up and took me out right there. These guys went to $1.40. Missed out on quite a bit of move there. Just gonna continue to beat myself up over it because I'm reading price right. I'm just getting a little bit too anxious, too close to price with my stops still. And it's just, like I said, the sell-off is not as fluid as I thought it was going to be, so move on. Later in the day, I took these 287 calls here. I thought we were going to close at about where the weekly open was, which was, I think it was 289 and a quarter, somewhere around here. So I took these 287 calls here at 38. On the flag break higher, I added at 55. The initial pop a little bit higher, I took some off at 60, and the rest trailed me out here at 43. So overall, it's a decently green trade. Could have been a little bit better because these things went to $1.80, but again, nothing has been fluid, so just taking the profits where they come. Later on, I took these 28 June 310 calls here at a dime simply because if this is a true reclaim of the 50 SMA, we are going to make new all-time highs in the very near future. That would push these up to 30-35 cents a piece, and nice little trade for some extra cash flow and very low risk. Onto my trade plan for next week and what I'm looking at doing. First of all, this little green bubble here I've had on there for about a week now. I wanted to see if we were going to retest this trend that broke and caused the gap higher from back here in April. Of course, we have now tested it. We have now filled the gap and found a significant amount of support right here, whether it was organic buyers, natural buyers, or if it was short covering. I don't care. It's obvious that there was buying, and we pushed up and put in a huge green outside bar, bullish engulfing bar, which is, it looks very strong. It looks like we are prepared to go much higher, and we'll get to that in a minute. Now, if we pull back to the 50 SMA again, I will take 285 calls with about a month of time. Below there, I'll look for these 200 SMA, 277 calls with about a month of time. Above, I'm not looking for any breakouts unless we start to inch up to this 294, 295 area, chop around, and then pop higher. Then I'll take a breakout trade, but with price action overhead, I'm going to try and avoid breakout trades at the moment. So we'll see what happens with that on Monday. On to Futures, I'm going to touch on these real quick. Another big, huge bullish engulfing bar on the daily time frame. I went back and I tried to find how many instances we had a high volume green bullish engulfing hammer candle, um, and I found 26 of them. Every single one of those, this was back to 2009, every single one of those was actually higher within the next 3 to 4 days, except for one, and that one only went sideways for 3 days. On day 4, 5, 6, and 7, all continued to make new all-time highs because it was a candle that only pulled back after reaching all-time highs and touched the 8 and 21. So every single one of these 26 instances went higher. On the weekly time frame, also a very unique candle that has set up here, a high volume, long lower wick red bar. I went back to 2002, if I'm not mistaken, and found 14 of these instances. 11 of them were higher over the next 2 to 3 weeks. 3 of them actually went lower. These stats are encouraging for me, being a perma bull and looking to take trades from the long side. I will touch on this recent price action, at least in the last year and a half. You can see these big, huge volume spikes, which if we are on lows, I would say this is indicative of accumulation, but because of where we are in the market right now, this is potentially distribution. But the thing is about being this high and the amount of volume that's coming through on E-minis, on SPY and SPX, there has to be tremendously huge players, participants that are making these trades. There are several million share blocks of SPY traded at 293.40-ish area. That is way more than what almost all the retail in the world could buy. It's big money. Has to sell to big money, and that seller, that receiver of those shares, is most likely not going to let the market drop below where they buy, at least not significantly. So let's say they're buying up in this region here. Worst case scenario, they're going to be buying even more down here, because if they're comfortable with buying up here and in a vehicle that is designed to go up, why wouldn't you be willing to buy it lower? So just keeping that in mind going forward. The weekly time frame, just a big indecision bar. Monthly has already taken out the high and the low of April, which means it is an engulfing bar. However it closes will determine whether or not it is bullish or bearish. If it can climb back up over 29.55, it turns the month green, and we most likely go to a bullish engulfing month, and we come up to this this target that I have here for a while. This month will be roughly 30.18. Next month maybe 30.30. So a little bit of room higher that we could potentially go, in my opinion, unless this is legitimate distribution, which we won't know until I'd probably say 6 months down the road. That's pretty much it. That's my thoughts on E-minis and SPY. I also want to touch on transports, IYT, another big green, almost hammer candle. Volume isn't necessarily there to confirm participation, but it is by itself a bullish bar. Now, I think it looks like we just had to have one retest of the 50 and 200 SMAs. This is the first time we've actually broken above, closed above, put in a new high, a new recent high anyways, and come back to test it. So my theory here is we are making a new higher low in relation to this last swing, which was around 180. So as long as price action stays above 186.65-ish, swings to the high side should be somewhat safe in my opinion. We'll continue to keep an eye on transports. Now, monthly time frame still developing, but it's just showing indecision. The weekly time frame is another indecision bar, so it is a coincidence that everything in the market is putting in these kinds of candles, because that's what the whole market is doing. We're going to wait and see what happens with the China news. I'm doing my best to not get chopped up too much more in some of these trades, and look to trade some individual names outside of SPY. So those are my thoughts, my trade plan for next week. If you have any questions or comments, please feel free to leave them down below. Come join me over in the Trade Crew chat room. It is a free chat, and follow along with some live trades. Have a good weekend and good luck on Monday.